Well, the big story tonight, the decks have been cleared for the Satyam stake sale as the market regulator SEBI endorsed the board's stake sale plan. Satyam has received regulatory approval to sell as much as 51%. That's through the global bidding process. The investor will acquire the stake by first buying 31% through a preferential issue and then making an open offer for a minimum 20%. So on What's Hot tonight, we ask, do the bid guidelines find favour with potential suitors? And to answer that, we've got with us Prabal Banerjee, the Chief Financial Officer of the Hinduja Group, one of the suitors for Satyam. Mr. Banerjee, many thanks for joining us, sir. Let me start by asking, you've had a look at the guidelines that were announced this morning. We understand that the RFP is in the process of being finalized and that should be put out early next week. But on the basis of what you've heard from the board so far, is Satyam looking like a more attractive proposition to the Hindujas?
Well, I would say only the process has been clarified, which is a very welcome step. I would say it's a right step in the right direction. But this process itself will only make the entire process smoother for the acquisition of the company. But I do not think that makes it more attractive. It only clears the way. The important thing, in my opinion, as I have been talking about it, is a very clear contour of the financials of the company. The restated financial statements, which is important for any bidder, in my opinion, as well as you also have to have a clear visibility on the liabilities that can remain and reside in the balance sheet of Satyam, on and off balance sheet, and on top of that, the liabilities that can come out of the class action suits filed in US. So those will give more comfort rather than only the process.
Sure, but on both those issues, sir, the restatement of accounts as well as a sort of idea of the liabilities, there is no clarity because the board is absolutely certain that the restatement of accounts will not happen, while the sale process is on, because that will take much longer than what they had anticipated and what they were hoping for. And even as far as liabilities is concerned, there is a question mark really on what that range could be. So given that situation, are you now more enthused post what you've heard this morning, or are you still apprehensive about bidding for Satyam?
Let me explain this as far as we are concerned. You see, let's look at the regulations that have come out in the morning. There are three things that have come out on the expected lines. First of all, it is 31% preferential allotment plus 20% open offer. In my opinion, this 20% open offer is unlikely to succeed. Why? The only reason that I can clearly see is that for the minority shareholders, if people like, say, Hindujas or L&T or Tech Mahindra, or for that matter if IBM comes in, I think minority shareholders are intelligent enough to stick to the company rather than selling at these low prices. And they will possibly wait for 2 to 3 years when these reputed bidders going to create much long-term sustainable valuation, and they will preferably exit at a much higher valuation 3-4 years down the line. That is what I would expect the minority shareholders would behave like. Now, if that is going to happen,
yeah, go ahead.
If that is going to happen, where does that lead us? Then it leads to a scenario where instead of open offer, you actually go for the second tranche of the preferential allotment. What happens to the preferential allotment? The consequences are very clear. We just did a rough back-of-the-envelope calculation at certain assumed prices. It has a couple of consequences. Number one is that if the second tranche is a preferential allotment instead of the open offer, then what happens is that, number one, for the minority shareholders, it's a much increased dilution compared to the first methodology of 31% preferential allotment plus 20% open offer. That's number one, because that will be a much higher valuation for the simple reason that the 20% second preferential allotment would happen on the expanded capital, because by that time the first preferential allotment has already happened. So the dilution will be much higher. Let's look at it from the bidder's point of view. From the bidder's point of view, even if everything is equal, what will happen is that they will have to put in much higher amount of money on the table for the simple reason that when they go for 20%, even at the same price, preferential allotment in the second tranche, is very simple. The capital has been expanded and they'll have to actually give much more money. From the company's point of view, but the second option is more preferable because all the money is going to come into the company kitty which the company needs, and it will be profitable for them to have the entire 51% as preferential allotment. Though it is not without a string. The string is that the company should have enough amount of cash generation for the following. Apart from the expanded equity servicing, which is extremely essential, they have to ensure that the cash generation is good enough for carrying on the business of the company's business. Number one, to be identified as a going concern. Number two, pay off the debts that will be there on the books of the company. And number three, on top of that, has to return enough amount of money on the capital invested by the equity shareholders. And that is what the bidders has to look at.
All right, interesting points that you're making there as far as, this whole business of 31% open offer plus a second preferential equity issuance if the open offer fails. But Mr. Banerjee, before we actually let you go now, I'm going to ask you a pointed question. At this point in time, on the basis of whatever you heard, are you going to put in a bid as far as Satyam is concerned?
Let me tell you, we have our interest. We have looked at the entire business very carefully. We have looked at how do we structure the whole deal. As of today, the interest is still there. Otherwise, I would not have been there. We need to take a call, internal call, after taking into a lot of things in consideration. And I would suspect as of today, the interest is as strong as it were before. And we need to take a call before possibly we put in a final bid when the RFP is expected to come in maybe in about 5-7 days time. So we are yet to take a final call. How do we go about it? And I cannot talk about it in public domain, obviously, but we are interested. And we are looking at various options for that, how to structure the entire thing, how to manage the entire solution and the process. We are looking at it very, very carefully.
All right, Mr. Banerjee, many thanks for joining us and taking us through what your ideas are as far as the guidelines that have been announced by the Satyam board for the bidding process. Many thanks for joining us.